If you're holding Stellar, XLM, or Ripple XRP, the recent dips might have triggered panic. But here's the truth. These corrections are short-term volatility, not a sign of fundamental weakness. Before we dive in, make sure to bookmark this guide and share it with fellow XLM/XRP holders. The information here will help you make informed decisions to maximize gains during market dips. Over the past month, Bitcoin and Ethereum corrections have caused broader market ripples. XRP fell under $3, while XLM reached 39 cents. At first glance, these dips may seem alarming, but experienced traders recognize this pattern. Temporary panic followed by long-term accumulation opportunities. Recent news impacting the market. Google announced new restrictions on unlicensed crypto wallets in the US and EU. Headlines frame this as a ban, but in reality, it's regulatory oversight aimed at controlling the ecosystem while large players quietly expand positions. Institutional investors continue to accumulate XRP and XLM. Major banks and fintechs are integrating Ripple and Stellar technologies into cross-border payments. The takeaway: the market is shaking out weak hands while strategic holders position themselves for growth. Why panic is dangerous? Retail investors often react emotionally to price drops, selling at temporary lows. History shows that the majority of gains in XLM and XRP come after such corrections, not before them. In 2024, XRP experienced a 30% dip before rallying 120% over the following months. Similarly, XLM had a temporary pullback in Q3 2024 before outperforming most altcoins. Panic selling during these dips often results in opportunity loss, while holders who maintain or strategically increase their positions often reap outsized gains. When the market experiences short-term volatility, it's tempting to react purely based on price charts. But long-term success in crypto comes from understanding fundamental drivers. For XLM and XRP holders, fundamentals are stronger than ever. Adoption, partnerships, institutional interest, and regulatory clarity are converging to create an environment ripe for growth. While headlines scream crypto crash, experienced investors understand that temporary price dips are a natural part of market cycles, often setting the stage for substantial gains. The recent dip is no different. XLM and XRP are undergoing a shakeout, but the long-term value proposition remains intact. Stellar Lumens, XLM, has positioned itself as a key player in the global cross-border payments sector. Its blockchain enables fast, low-cost transfers, making it ideal for both retail and institutional use. One of the earliest and most significant collaborations in the blockchain space. IBM's World Wire network leverages Stellar for international payments. Over 50 banks and financial institutions have been on board to test and deploy these solutions. Several new fintech partnerships have been announced in Asia and Africa, expanding Stellar's footprint. For example, XLM is increasingly used in remittance corridors between the US and Latin America. Stellar's network supports multiple USD-backed stablecoins. This integration is crucial because it bridges traditional finance and crypto, attracting institutional adoption. Unlike speculative altcoins, XLM's primary value comes from utility, enabling frictionless cross-border payments. As more corporations and financial institutions integrate Stellar for remittances, micropayments, and tokenized assets, the demand for XLM naturally increases. XLM has a fixed total supply of 50 billion coins, with a significant portion allocated for network growth and partnerships. Unlike some altcoins that inflate supply, XLM's controlled issuance ensures that accumulation pressure can drive meaningful price appreciation during periods of strong adoption. Valued at over $700 billion annually, with fees averaging 7% per transaction, Stellar's sufficiency could capture a significant portion of this market. Stellar is increasingly seen as a candidate for central bank digital currency experimentation, particularly in emerging markets, positioning it for long-term strategic adoption. XRP has been under intense scrutiny due to its ongoing legal battle with the SEC. However, recent developments in 2025 have strengthened XRP's fundamentals. Courts have signaled clarity on the classification of XRP as a digital asset. While not fully resolved, the trend favors XRP's legitimacy as a utility token. Historically, positive regulatory signals result in significant price rebounds, as seen in 2021 to 2022 during initial case updates. RippleNet, the backbone for XRP cross-border payments, continues to onboard new banks and financial institutions. Recent reports indicate over 200 global partners actively using the network for real-time settlements. Ripple has signed agreements with banks in Europe, the Middle East, and Southeast Asia, integrating XRP for liquidity solutions. This positions XRP as a go-to token for enterprise-grade finance. XRP's primary use case is liquidity management for cross-border payments, particularly for high-volume transactions. Unlike speculative tokens, XRP has a consistent demand driver. Financial institutions that need fast, low-cost, and scalable payment solutions. XRP has a capped supply of 100 billion coins, with a portion escrowed and released systematically. This mechanism ensures scarcity over time and supports long-term price growth as adoption accelerates. Regulatory developments, turning risk into opportunity. For both XLM and XRP, regulatory clarity has become a catalyst rather than a constraint. Governments are increasingly supporting self-custody solutions, ensuring holders can legally manage their tokens. Google's unlicensed wallet policy initially caused panic, but it indirectly validates institutional accumulation as major players secure compliant channels. Stellar is exploring collaborations with central banks, while Ripple provides infrastructure for cross-border CBDC settlements. These partnerships institutionalize demand for XLM and XRP. Both networks actively adopt KYC/AML solutions, enabling enterprise adoption while satisfying regulators. Regulatory events that appear negative are often strategic shakeouts, removing weak hands and setting up long-term price stability. Institutional accumulation and strategic buying. One of the biggest drivers of potential price growth is strategic accumulation by institutional investors. XLM. Hedge funds and fintech firms are quietly increasing XLM holdings to prepare for cross-border payment demand spikes. XRP. Major banks and private equity funds are acquiring XRP, anticipating widespread RippleNet adoption and improved regulatory clarity. Historically, such accumulation precedes price appreciation by months, sometimes years. For holders, understanding who is buying and why is far more important than reacting to daily price swings. Technology and network strength. Stellar's consensus protocol is energy efficient, fast, and scalable, allowing micropayments, tokenized assets, and remittances without high transaction fees. Ripple's protocol handles thousands of transactions per second with near-instant settlement, making it a reliable infrastructure for banks. Both networks have real-world utility, giving them staying power in a market often dominated by speculative coins. Market psychology and historical trends. XLM and XRP have historically shown resilience during market crashes. Short-term price dips often shake out weak hands. After corrections, both tokens have experienced sustained growth driven by adoption and institutional interest. Example: after the 2023 to 2024 crypto crash, XLM rose by 85% within 9 months due to renewed adoption, while XRP rallied 120% post-SEC positive signals. Why the current dip is a trap. Headlines exaggerate fear. Crypto crash, prompting panic selling. Regulatory developments, institutional accumulation, and growing adoption signal strength, not weakness. Historically, periods labeled as crashes often mark the start of new accumulation cycles, particularly for fundamentally strong tokens like XLM and XRP. Bottom line, the current dip is an opportunity for long-term holders to reinforce positions rather than sell in fear. Takeaways for holders. XLM is backed by adoption in cross-border payments, fintech integrations, and CBDC collaborations. XRP is supported by institutional use, regulatory clarity, and robust liquidity solutions. Short-term dips are normal and often precede significant price growth. Accumulation by smart money indicates confidence in long-term value. Understanding why requires looking beyond price charts. Let's examine the latest fundamentals, adoption trends, and on-chain metrics that reveal the bigger picture. Despite the visible dip, On-chain activity for both XLM and XRP shows strong accumulation by institutional and long-term investors. For instance, wallet analytics reveal that addresses holding over 10,000 XLM or XRP have increased steadily over the past 60 days. This indicates that smart money is scooping up tokens at discounted prices while retail panic sells. Historically, periods of price dips accompanied by accumulation have preceded massive upward moves. Look at 2021 for XRP during the SEC legal uncertainty. While retail sentiment was negative, large wallets quietly accumulated millions of tokens, and the subsequent rally rewarded those holders who stayed patient. The same pattern is repeating now. Additionally, exchange inflows for XLM and XRP are trending downward. This suggests holders are moving tokens off exchanges into cold storage, reducing circulating supply and decreasing the likelihood of a panic-driven sell-off. When coins leave exchanges, it is a classic bullish sign. Long-term holders are signaling their intent to ride out short-term volatility. Market manipulation and the psychology of fear. Many retail investors interpret this dip as a signal to sell. Headlines emphasize crypto crash, which triggers emotional reactions rather than rational decisions. But smart investors understand that large market players often leverage fear to accumulate positions at discounted prices. Recent data shows that whale addresses for both XLM and XRP have been increasing holdings during this dip. When the market appears weak, it's often a strategic opportunity for long-term holders to enter or increase positions. Fear sells while smart money buys. Classic market psychology. To illustrate, consider XRP's price behavior during previous market corrections. Each time the token dropped sharply, the dip coincided with whale accumulation. The subsequent rebound not only recovered losses but generated substantial gains for those who held or increased positions. XLM has followed a similar trend. Historical charts show that dips caused by external panic, news, regulation, or market sentiment tend to be temporary when network adoption and fundamentals are strong. Supply dynamics, scarcity in action. XRP and XLM both have unique supply dynamics that make them resilient during market corrections. Ripple controls a significant portion of XRP, but scheduled releases are transparent, limiting unexpected inflation. Stellar has a fixed total supply with regular token burns that reduce the circulating amount over time. This scarcity principle plays a critical role in long-term price movements. Reduced circulating supply, combined with increasing adoption and transaction volume, sets the stage for rapid price appreciation once short-term panic subsides. Furthermore, token burns and network buybacks from strategic treasury management are becoming more common. For example, Ripple has periodically repurchased XRP to fund strategic initiatives, effectively reducing supply while signaling confidence in long-term growth. Stellar has implemented burning mechanisms that continuously remove tokens from circulation, creating a scarcity effect that can amplify price gains. Technical indicators signaling recovery. Technical analysis for XLM and XRP currently shows oversold conditions on major exchanges. Moving averages and RSI metrics suggest that both tokens are near strong support levels, indicating potential price stabilization and a likely rebound. Key indicators to watch. Support levels. Major support zones for XLM and XRP have historically held during market dips. Volume trends. Increasing trading volumes during dips indicate accumulation, not panic selling. Funding rates. Neutral or slightly bullish derivative funding rates reduce the likelihood of cascading liquidations. These signals reinforce the thesis that the current dip is temporary, a trap rather than a crash. Accumulation strategies for holders. Smart accumulation is essential during market dips. XLM and XRP holders can employ several strategies. Dollar cost averaging, DCA spread purchases over several weeks to reduce exposure to short-term volatility. Support zone targeting. By near historically strong support levels to increase risk-adjusted returns. Portfolio diversification. Hold both XLM and XRP along with other quality altcoins to balance risk and reward. These strategies ensure holders can maximize gains while mitigating downside risk during volatile periods.